again, the 14th of April, and we have Rory McIlroy finally wearing the green jacket for anybody who cares. Most Irish people do. So we'll sing it from the rooftops. Some good news anyway. Fun news, if nothing else. Brent crude oil trading little change this morning in early Asian trade at about 65 dollars a barrel, give or take a few pennies, but ultimately starting where it left off on Friday. Omar Najia, global head of derivatives at BB Energy, always available on Monday to make sense of the world. Omar, this is your chance. Put it all in order for us. Where is
Uh,
it all going? Is the chaos going to continue this week, or has some kind of normality returned? Your thoughts this Monday morning? No change on the oil price, at least.
no, I think basically you've got to see more chaos come into the market. So over the weekend, Trump said, last week that no exceptions, no this, no that. Now he's saying like exceptions for phones, semiconductors, computers, blah, blah, blah. People thought that meant no tariffs. Now it appears that it means 20% tariffs. Some other people saying it means something else. So nobody has basically a clue. But the problem is that US equity markets aren't exactly strong. The US dollar is falling and continuing to fall, and I think it continues to fall. So my initial target was 100% on the dollar index. It's broken that. So I think basically we go lower still, maybe towards 80%, 85%. So that's negative. The equity markets, who would buy equities now? Who's going to come and say, you know what, I'm going to go in and start buying, and it seems like I can calculate everything and I can think of all the risks and whatever. So I might as well get some hard-earned money, put it into the markets. Nobody, right? The other thing is you're seeing the bond market, this 10-year treasury, the yields go up and strongly. So before Trump came in, the high was 5.17. They're trading at 449, 450. So it's all looking podcast. So it's all looking that was the CEO, by the way. So it's all
Well,
looking a
send
bit
him my best regards.
I
Alan
shall.
Basatne,
I
all
shall.
hail the
I
king.
shall. I shall. So basically it's all looking a bit dodgy. So I'm not at all confident as to what happens next. It all seems so chaotic. It all seems like we're going to do this for certain. Then it's like, well, maybe not. And then it's like, okay, we're going to do this, and then we're going to delay it. Then no, we're never going to delay it. No. So there's when markets are this uncertain, I wouldn't buy anything. I wouldn't buy oil. I wouldn't buy equities. I wouldn't buy anything at all. I wouldn't even buy gold. I wouldn't buy anything at all. And the problem is, if you hold dollars, that's doing something in itself. So I don't know. I stick to my Bitcoin, and let's see what happens. But I'm bearish across the board.
Brian Pieri, founder of Energy Rogue, sitting in beautiful Colorado. Brian, we have to sort of stay focused on our lane, so to speak, in terms of what we can really kind of get our head around, because there's certainly no shortage of things to be distracted by. Brent at 65 puts WTI at a low 61 or something like that. Reports showing that U.S. oil industry is shuttering in rigs as fast as they can. Where does this all come to the ground in sort of oil supply growth out of the US this year? Is there a way to kind of get tangible on that?
Absolutely, absolutely. Thank you, Sean, and thank you for having me on. And as Omar said, there's a lot of negativity out in the marketplace and on some of the stories that you guys are tracking. I was somewhat amused at one of the headlines that talked about Chris Wright and that on lower oil, U.S. producers are going to survive and thrive. And it made me laugh a little bit because I'm like, no, but U.S. producers aren't going to survive and thrive. But let's pull back and say the U.S. is producing approximately 13.5 million barrels a day every single month because of the nature of shale and the vintage of when it was drilled. The US declines. It has a natural decline. If you don't do anything, reservoir pressures drop. less barrels come to the surface. So if nothing was done, no new barrels were brought online, no mechanical or operational influence was there, 650,000 barrels a day disappear each month. So what that means is if you went over the course of a year, I mean, you're talking about 4+ million barrels a day, maybe up to 5, without new supply. Now, rigs are being shuttered. Last year, we had kind of a base case of roughly 300 rigs across the Permian that we saw, and kind of a base case of how many rigs are out there. And last year, we saw us grind from 13.2 to 13.5 million barrels a day. Basically, we had rigs just enough to offset the 650,000 barrels a day decline and add 50, 60,000 barrels a day. What that means is each month we need to bring on close to 700,000 barrels a day to grow by 50,000 barrels. So with the recent price drop, and bear in mind, in January, WTI it hit 80 right before Trump took office. So we have dropped significantly. Now, the way these rig contracts work is they're not on again, off again, day by day, week by week. They are longer term contracts. So you may see a 2-month lag before you see rigs drop. So any drops that we're seeing today were actually decided 60 days ago, 90 days ago. So what that means is by the time we hit summer, we're going to see a lot less rigs, which means we're going to see kind of a grind on that halt. The counterbalance is an increase in productivity, which continues to surprise a lot of people, including myself. But with that productivity actually comes added cost because the laterals are longer and it costs a little bit more. So I expect to see the U.S. at best case flat, most likely case that will gravitate down, maybe down to 13 million barrels a day if prices stay where they are. But as Omar said, it's kind of a day by day thing. You also have to look at the US dollar, the currency around the globe, as well as Brent. And the tariffs are having a massive impact across so many different industries, and it's an on again, off again. So that's what I see on the U.S. base case supply is best case flat, most likely case is decline.
Ihsan El-Haq, senior oil analyst and petroleum economist based in Austria. Ihsan, your thoughts on what all this means for OPEC Plus? Of course, we just heard there from Brian that supply out of the US this year flat to decline. OPEC Plus are doing the opposite. They are raising supply this month according to their quota plans, and then next month accelerating those increases, triple what they were this month. Where do you think OPEC Plus goes into this weakening market? Can they sustain $65 Brent?
Good morning. So first thing is that most of the growth this year was expected to come from the Americas. I mean, the US, Canada, Brazil, Argentina, they were expected to add much of the production this year. But it's not happening. No, they are all high-cost producers. I mean, at price of $60 per barrel, not only shale oil producers have a problem, as Brian pointed out, but also in Canada, it's not easy. Similarly, Brazil, subsalt production is very expensive. Argentinian shale is also high cost. So as a result, I think that also the members of OPEC Plus, I mean, if you look at Russia, Kazakhstan, if prices are low, I mean, they were selling prices higher than $60 per barrel. Now they have to be content with prices around $50 per barrel. Kazakhstan keeps on increasing production. So as a result, they are creating problems for themselves. If you produce more, it results in a downward pressure on oil prices, which is not good for all these members. And then China. I mean,
So if it's not good for them, why are they doing it? I mean, it's one thing for a country like Kazakhstan or others to violate the quotas, but to actually, as a group, agree to all increase into a weakening demand picture. Why do you think they're doing that, Hassan?
I think, first of all, they want to increase revenue. I mean, which is important. And I mean, Kazakhstan is also high cost producer. So as a result, they need money. And as a result, they keep on increasing production. And I was just turning towards China. China has now low energy prices. I mean, part of the impact on because of tariffs can be mitigated because of low energy prices. So, I mean, China.
But not just for China. That, of course, is for everyone. Omar, I wanted to get your thoughts on that because, of course, there is the lower energy price feeding into, as time goes on, helping to control inflation. But my question, Omar, to you as a trader and a trading company amongst a very large global peer group, how would it be better that Trump administration stuck to its decision to increase tariffs rather than the flip-flopping? Which is worse for the markets, trading, the flip-flopping or the lack of predictability, or the opposite? The predictability was very specific. You're getting X%. Everybody knew what the picture was going to be. Now with the flip-flopping, nobody knows. Which is better? Which is worse for the outlook for trading?
Well, I mean, obviously, flip-flopping is the worst thing possible because there's lack of clarity, right? There's lack of clarity. Then when you take a position, you get whipsawed. So you're in, you're out. You do this, you buy, you sell, you buy, you sell, you sell, you buy. So obviously, this is not good. But I think what we're missing.
I thought traders loved volatility.
Yeah, well, volatility means different things, right? Volatility means if you break out of ranges, if you set new highs or new lows, that's what volatility is. Volatility isn't like doing a zigzag, right? And if you do a zigzag, the problem with the zigzag now, it's that it's happening on a daily, if not hourly basis. So you get one thing said and then something else said again, then something else said again, sometimes 2 or 3 times a day, right? Which makes, this kind of headline trading knee-jerk reaction almost impossible. So that's what's very, very bad for the market. What it does is it breaks trust in markets. It breaks trust in US markets. It breaks trust in the US government. It breaks trust in the US president. So when I come and I say, as the US president, we're going to impose tariff. No, we're not. We're going to do this. Well, not really. And then he says, well, I'm going to say 100%. Well, maybe it's 20%. And I'm not going to turn back. Well, yes, I am. So when you do all this kind of stuff, it's very difficult to gauge what to do. But I think the bigger picture that we're missing is that there is something fundamentally wrong with the US economy. It is not the president. The president, I think, is trying to solve lots of problems, but there is basically something fundamentally broken in the US economy. And they're trying to fix it, but I start to seriously worry that this is all going to go absolutely pear-shaped, because I don't see a way in which, I mean, Doge, right? If anybody remembers, they were supposed to save $2 trillion. Then it was like, no, 1 trillion. And now it came out that basically the total savings that they're going to do for 2025 is 150 billion. 150 billion. And of those, maybe 15% less because of accounting, I don't know what. So you've gone from a saving of 2 trillion to 1 trillion to 150 billion. It's a complete joke. So I think, and the way that the US politicians are talking, like, we're going to destroy and somebody's going to come kiss my ass and say, please sign the deal. I don't know what. I mean, it's bedlam. So I think these markets need to go a lot lower, not for any reason, but to kind of focus minds, to kind of get somebody to actually take things seriously and do something. I think this 10 years is going to blast through 5%. I think it's going to absolutely rocket. And I think then you get Powell come in and start saying something about emergency cuts and all this kind of stuff. But if somebody doesn't get hold of this thing relatively quickly, I think we're headed.
Well, isn't that what happened last week? That was the crisis moment that the 10-year was going off the rails, and so they abandoned the reciprocal tariffs. That was
it's
higher
now. It's higher now. The 10 years higher now.
But not increasing as fast as it was over those few days from like 3.8 to 4.5 or something. The rate of acceleration has slowed down. That element of crisis, perhaps. Brian, it's just sort of picking up on that, which again, to the earlier point, U.S. oil production capacity. I mean, one would say, and I'm trying to get a sense of where this is going to go for obviously supply in the U.S. You said they're flat to possibly down 500,000. The U.S. oil industry, and particularly the shale patch, would say, hey, we are this great American manufacturing industry you want to build. We're already here. Hello, we're already here, and we import a lot of stuff to make the stuff we make. Like we need a lot of steel, for example, to manufacture shale oil every day, and so forth. How punitive is the already existing tariffs on the U.S. oil industry, the cost architecture of the supply chain, steel, etc., to produce? Does it raise the cost threshold of production, and with that higher price, make the problem doubly? Where's the impact of existing tariffs? Forget about what's coming in the future.
Yeah, that's actually a great question, because there's two things that you touched on that a lot of people miss. One is the inflationary effect of tariffs. And I'm actually amazed in the United States. I talk with, if you only listen to headlines and you only listen to what Trump says, he's imposing the tariffs to punish the other countries. Well, the fact is, the tariff is imposed on the importer. So it's actually imposed in the United States on a US-based entity. And so it is inflationary by nature. Now, there is a school of thought on economics that means that one of the trading partners has a lower bid for those goods or those services. So there's a theory that everybody else is going to back up their bid. That isn't necessarily the case. Somebody might step into those shoes and actually consume more because of that theoretical decrease in price. But so to answer your question, your second question first, which is, it is purely inflationary. So steel, everything is going to cost more. And this also comes at a time where Omar is referencing a lot of volatility, which is an uncertainty. We don't know what day we're coming into. As a matter of fact, before the podcast, I'm like, let me make sure we're in the same headspace. And Hassan was talking about that as well. So every day we're trying to figure out which way is up, and that is very confusing. But I do want to touch on one other component, which is interrelated on tariffs. And yes, we produce a lot of crude oil. We also refine a lot of crude oil. We refine over 15 to 16 million barrels a day of refining capacity. Now, if we take a look at that 13.5, we export roughly 2 to 3 million barrels a day, and we import 5 or 6. So we are a net importer. But the reason that we do that is we're getting a different crude quality. So even though we could theoretically shutter half of our imports and only refine U.S. crude, well, what that means is more gasoline, less distillate, less jet, less heavy refined things, because our crude in the United States is light and sweet. So it has a higher API gravity, which means less energy density. And then you have imported crude, which is heavy and sour, and there's a better refining spread there. But crack spreads are shrinking. Refined products are dropping. Diesel surprisingly is still showing decent fundamentals, but that could be short term. But that's only in the US, that's not globally. So I think what this may do, our net imports have decreased 1 million to 2 million barrels a day year over year. What that means is refineries are already tuning a little bit to this, but that means that we're going to be longer gasoline and less distillate. So I think that's going to create some interesting problems down the way because distillates are where the backbone of the heavy industry. So anyway, those are two things that a lot of
these
people
are,
miss.
yeah, they're also with the extra sanctions on Venezuela. The Trump government has sort of blocked that access to that heavier crude that the U.S. refiners like. Hassan, where are we at in Europe this Monday morning? You're sitting in Vienna, the crossroads of Central Europe, where there's always been a strong relationship with Russian gas imports, and where Europe obviously has also paused its retaliatory tariffs on the United States. Where is the unity of Europe at the moment? Where is the outlook, do you think, for their strategy? They obviously will welcome these low energy prices.
Yes, Europe certainly loves lower oil prices, but on the other hand, there is also pressure on Europe to take more US crude. And I don't think that Europe has the capacity to take more US crude. I mean, if you look at how different countries are behaving, I mean, the European Union appears to be united, although there are frictions between Hungary and some other countries. But I mean, the majority of these countries, they would love to have lower prices, but there is no possibility of taking more US crude. Margins are bad. Some refineries are being shut. I mean, now the arrival of now refined products from the Dangote refinery in Africa is another challenge for the European refining industry. So, I mean, Europe appears to be united. There are some frictions. You can, for example, also take Turkey. Turkey takes Russian oil, but the rest of Europe has been trying to avoid Russian oil. And now if there is an agreement between the US and Russia, we might have a different kind of oil flow. Whether Europe is likely to take this crude, I don't think so. Most European countries will not take Russian oil. They will continue to have sanctions against Russia. And where can this crude move to? I think probably the US might take, instead of Venezuelan crude, if they don't have heavy crude from Venezuela, Russian crude might be welcome in the US. Also, some then Indian refiners.
But isn't the Urals also a sweeter crude?
No, it's medium sour.
Medium sour.
And most refineries, especially in the Mediterranean and Central Europe, they were built to process Urals. So what they have been doing, they have been taking Johan Sverdrup, for example, which is heavy. They have been blending it with some lighter crude to produce something similar to Urals. Similarly, some Latin American crudes, heavy crudes, they were being blended with lighter crude from West Africa, also from the North Sea, to produce something similar to Urals. Now, even Spanish refiners, they were taking some Venezuelan crude. They can have difficulty, and Mexican production is not increasing. And with higher prices, I think there will be also some pressure on Mexico, and probably they will also have problems with increasing production. So heavy crudes could be a problem. In Asia, on the other hand, I mean, if there is less US crude going to China, if there's no US crude going to China, they might take Middle Eastern crude, which is medium sour. So, I mean, refiners always have to adjust to changing
That's
quality.
that's a lot of new flows. We thought the Russian-Ukraine war brought new flows. That certainly is a whole nother smorgasbord. Let's go to the survey question this morning, which is looking at this bigger point, which will maybe give a direction on oil price. The 2025 global oil demand growth was forecast to be between 1 and 1.5 million barrels a day before the US-China trade war kicked off. That was generally the sort of range in which most multilateral agencies had forecast the year ahead, most banks and so forth. What will it be now? Same, 1 to 1.5, closer to 1, 500 to 800, or under 500? How big an impact does this global trade war and all of the uncertainties, even with tariffs now postponed, or at least the reciprocal tariffs postponed, how big an impact does this have on the global oil demand growth? That's the question inevitably everybody's asking in order to get a sense of level. Same, closer to 1, 5 to 800, or under 500. Looking at that, Omar, your thoughts, global oil demand growth, OPEC plus raising supply, even with a sort of contraction, perhaps, as Brian indicated in the US, what gives this oil price a floor? It seems like we're stabilizing in the mid 60s. Are we, or is there another step down here, do you think?
No, I think there's another step down. I think there is another step down. I think basically that we're going to set new lows. OPEC has got plenty of oil. Russia's got plenty of oil. Saudi, everybody's got plenty of oil. There's no shortage of oil. And basically people say, yeah, there's a lack of investment and all this kind of stuff. Yeah, maybe if you want to look what's going to happen in 5, 10, 20 years, blah, blah, blah. But if you're talking about today, there's plenty of oil. Problem with is that there's no demand. And if you basically say to business people or people who use energy that, we have no idea what's going to happen in the future to your business, do they A, buy more energy, or B, decide to sit on their hands and not buy energy? So I think it's going to be B, which is sit on their hands and not buy energy, which means there's plenty of supply, and demand will have a giant, great big question mark against it. So I think lower now, things could change by this afternoon in case Trump says, I was only kidding, everything goes back to normal. You don't know. But I mean, generally, the way this is going now, I think basically we need to see new lows.
Brian, your thoughts again on the survey question. Does demand growth inevitably decline from where we thought it would previously going to be?
Yeah, I actually selected, I think, 500,000 to 800,000, which is roughly a third or a half, depending on which benchmark you choose. But I think our growth targets, there is an underlying growth target. A lot of people look at mature economies and whether or not they grow, and a lot of people question whether China is in a mature economy state to where we're not going to see rapid expansion on GDP as we saw decades before, but we're going to moderate to a 4.5% growth rate. And
if that, I mean, with their biggest customer shutting their door to them as the world's largest exporting country, it seems to me they'll struggle to get to 4.
Yeah, well, and combined with that is some of the tariff volatility. I was just noticing that our LNG from the U.S. Was about 8% in October, November of our exports went to China. In January, before the tariff talks, so January dispatches are scheduled in December. In January, there was 0 going to China. Now there are already some ships in play. Many of those were already resold. So China was already repositioning its chess pieces long before this administration came in. So there's a lot of big moves that are happening.
Brian, just to follow up quickly, I mean, the U.S. oil industry sort of cheerleaded Donald Trump back into office, threw a lot of money at his campaign. Are they still happy with this? Is this what they wanted? We saw ExxonMobil still return pretty decent numbers for the first quarter.
I I think people that support Donald Trump are searching for reasons to reinforce that they weren't wrong, because I think there's too much data that supports that the economic decisions and the havoc that has been achieved in the first 60, 90 days is punishing U.S. citizens in an inflationary environment and with less jobs because of recession talks. So most of these are not supportive for the average U.S. citizen, but most supporters are trying to find it, sometimes using mental gymnastics to reinforce or support that decision. And it's kind of like I was in a discussion with somebody on tariffs and what they were. What we were talking about is, I said this was a completely damaging policy to everybody involved. This was really not a wise move, in my opinion, because, we're going to punish people, and we're going to punish people because we don't want to pay more for iPhones or whatever. Well, the fact is, we can't manufacture iPhones here. We've offshored most of the industrial nature, so we're talking about a 3 to 5 year build out if we wanted to manufacture that here. There's not an alternative. So it's kind of like punishing a trade partner, and there is no alternative. So the other alternative is either it's going to be 200% more cost, or we're just not going to have, or the iPhones that we have are just going to be the same. Now I know they pause those, but yeah.
Well, it's hard to see Apple moving any major facilities out of China unless you literally put a gun to their heads, I would think.
Yeah.
San, last word for you on this same question. Where do you think global demand growth goes this year?
I think at the start of the year, people were expecting significant demand growth in three key countries: the US, China, and India. I still expect Indian oil demand to remain significant. But as far as China and the US are concerned, two pillars of demand growth are gone. I think demand is likely to increase only probably 500,000 barrels per day, something like this. I don't see any reason why demand should grow, unless, as Brian and Omar pointed out, there is a significant change in the Trump administration's policy.
Yeah, I voted for the under 500 number myself. San, just very quickly, is this going to be a year where we're going to see a lot of inventory build, do you think?
I mean, I was reading something that Goldman Sachs has set an increase of something around 290 million barrels this year, 800,000 barrels per day. So I think probably we will see an increase of more than 250 million barrels this year.
Which is why you're probably seeing that 2026 average oil price forecast to be with a 5 handle rather than a 6 handle. We're going to have to wrap it up there. Brent is still at $65 a barrel, holding, looking for direction. We're looking for the next shoe to drop, perhaps. Brian Pieri out there in wonderful Colorado, thank you so much. Omar Najia in the wonderful Dubai, and Hassan Al-Haq in Austria. Thank you guys for your time and contribution this morning. Let's see where will we get another crazy week? It's hard to think you could get a week like last week. Last week was sort of one of those gnarly, sort of
Don't
COVID moments.
Don't jinx it.
Don't jinx it. I'll shut up right now and get off air. Thanks, guys. All the best.
Thank you.
Thank you.
Thank you.
Thank you.